Hey guys, welcome back to another video here at Financial Hub. Now, welcome. It's Caleb here with you. It's been a while since we did a video on our YouTube channel. You can see for almost 2 or more weeks we haven't posted. Our latest video was 2 weeks ago, 2 weeks, 3 weeks, and a big reason of that is because of what has been happening in the country here in Kenya. With the Reject the Finance bill and everything that has been happening, and it was only right for us to also take the time to give respect to that. You have to understand what is going on in your own country and not just continue doing your own things, but also support the youth, the Gen Zs, and whatever is going on within the country. And we totally rejected the finance bill, and we continue to do so as long as it's still not clear with us. But that's not a story for today. That's a story for another day. I'm back here because most of you have continued also trading amidst all what's going on. I have been trading as well. A lot of people have been reaching out, asking for when the videos will be dropping on next, when the next analysis is. And here I am to continue sharing those information and what we do here at Financial Hub and trading in the financial markets. An advantage of trading in the financial markets is that you get to the possibility and the ability to trade amidst things going on. So when things are going on and you want to continue trading, you want to travel, you want to go for a holiday, you can continue working from anywhere at your own convenience. That's part of the advantages of trading. It's online. It's not centralized to one person who's controlling the whole market. Anyone can trade the Forex market at any time. So but here we are. Our goal is to come back. You can see we are about to hit 9,000 subscribers. So please subscribe to our channel if you've not yet subscribed, like and share our content with other people who may be interested, and let's try to get this to 10,000 as soon as possible so that we continue giving more impact and knowledge on the Forex market. Here at Financial Lab, we keep it real, we keep it honest, we keep it transparent, we share our trading data. Part of what I'm going to share today also, our performance, how we are trading, our returns, our losses, all those things. So today I want to do a bit of a market analysis, share with you what I'm looking at in the markets, how I analyze the market, and what I'm looking out for the rest of the week. I'll also share my performance this year so far. I always like to look at my performance on a 6-month track record. Every 6 months I tend to look at how I'm performing, how it's been, and what lessons I've learned from it. I never judge my trading performance in only 1 month of trading. So never judge your performance. Most people even judge their performance in 1 week. 1 week of data, they've traded, they made money, they think they're very good at trading. They lost money, they think they're very bad at trading. They didn't do anything, or they didn't make any money. They didn't lose anything. They think that the average trader. No. Don't judge your trading performance in 1 week, don't judge it in 1 month. Minimum 3 months, okay? And also 3 months is quite minimum, and it's also dependent on how many trades you're taking in that month as well, okay?
Here at Financial Hub, we offer the first 2 classes of our masterclass for free. In the first class, Introduction to Trading, you learn the initial overview of the concepts, principles, and practices involved in trading. In the second class, Fundamental Analysis, you learn the underlying factors driving supply and demand in the markets. You can get in touch with us by calling the number below or filling the form in the description box. Or you can visit our offices at Lavington Mall, Chandarana Building, 4th floor, office number 401.
Okay, so we're back. We're back at it, and we can jump at it. But before that, like I always do, who is my billionaire motivation for this week? Now, since I've not done a video for about 2 weeks, today I'll share 2 very important people to me who have been following for a very long time. Now, we've been looking at Elon Musk, Jeff Bezos. We've looked at a couple of people, okay? Bernard Arnault. The last time we looked at Bernard, he was number 1. He's back to number 3, okay? You can see this year, yesterday alone, Elon Musk added $11 billion to his net worth, and a total year to date in the last 6 or 7 months, he's added about $37 billion. Jeff Bezos, $44 billion. Mark Zuckerberg, almost $60 billion. Bernard Arnault is now on a falling Edge, where he's lost about 11 billion, still his net worth is more than 190 billion. So these people never think about their money. They're never looking at this. They don't even go to Bloomberg Billionaires Index to see who's at the top, who's not. This is just nothing to them. So but it's for us for motivation purposes. So for today, I'm going to the world of finance. I've been looking at a lot of people in technology, consumer, retail, and today I want to go to my good friends, number 33, Steven Schwarzman, who is the second richest person in finance. Okay, the richest person in finance at the moment is Jeff Bezos. Some people would consider it to be Warren Buffett. Okay, but if you look at Warren Buffett, he's more of diversified. Okay, and we'll talk about that later on. So Jeff Bezos is number one. He actually surpassed this not long ago. Okay, it used to be Steven Schwarzman for a very long time, but you can see this year Steven Schwarzman has lost about 500 million. Yesterday alone, he lost over 400 million, and Jeff Bezos has added about $6 billion to his net worth this year. Okay, so for today, I have two people. I have Steven Schwarzman and Ken Griffin. But let's start with Steven Schwarzman. So we knew about Steven Schwarzman when we were starting out trading. He started his own private equity firm. And I remember he was working for a different company with his friend, and they decided to come out of that company and start their own company, which is now known as Blackstone, which is the largest Schwarzman is chairman, co-founder, and largest shareholder of his company, Blackstone Group, a New York-based private equity firm. Okay, now note, this is not BlackRock. Most of you might be familiar with BlackRock, which is owned by Larry Fink, okay, who runs as the chairman and CEO. But this is Blackstone, a private equity firm. Okay, the publicly traded company manages $1 trillion in assets as of September 30th, 2023. The billionaire has collected more than $7 billion from a combination of stock sales, dividends, and compensation. So that's Steven Schwarzman. So I remember what I was saying earlier, when he started the company with his friend, they had no money, they had no experience, okay? But they raised the fund and they said they were going for a target of $100 million. They hadn't had that money before, they hadn't managed any money before, they hadn't done private equity before. But when they set out and they had that goal in mind, that was what they wanted. And they got that money, and ever since, they've not turned back. They've grown their assets under management from that $100 million to $1 trillion as of 2023, okay? He's 77, industry, finance, and a bit of his stories here. You can see he has a big cash pile of $13 billion. The rest is in his public asset of the BX US equity, which is Blackstone US equity, okay, and the rest kidogo of his money is in PJT US equity. Not sure what that is, but we'll check it out. So that's Steven Schwarzman. You can go to his page and read his story. Look at his story here: Harvard Business School, Yale. This is high top schools, okay. And check out his story. His story is quite interesting, and he does quite a good stuff in his career. Other than that, Ken Griffin. Now, Ken Griffin is one of the most influential people in the hedge fund industry. In terms of hedge fund, he's number one. Now, hedge fund is the epitome of trading, okay? If you have a hedge fund, you are the epitome, okay? Because hedge fund is a company which pulls capital from high net worth individuals, trades on their behalf, and they share profit, okay? Now, for Ken Griffin, okay, he's the chief executive of Citadel, a hedge fund with $63 billion assets under management. The Miami-based company has 5 core strategies in fixed income and macro, quantitative strategies, commodities, equities, and credit. He also founded Citadel Securities, a global market-making business, okay? Global money market makers, okay? That's a story for another day, who market makers are and how they make their money. So you can see his net worth. A big cash pile is of him actually in the finance, what you and I are doing in the trading and investing world. A bulk of his fortune was derived money as he's made managing Citadel Advisors, the hedge fund founded in 1990. It has about $63 billion assets under management, etc. So go read his biography Look how he started his story. He began trading convertible bonds in 1987 out of his dorm room with a $265,000 raised from his mother, grandmother, and 2 non-family investors. We always have to start from somewhere. Izo Kitambo, there was nothing like prop firms. You had to look for the money. And you can see you need money in order to make money. You don't start with $100 and grow it to $100 million. No. Okay? Be realistic and grow. So read their stories so that you can understand what did these people go through, so that you can prepare yourself to go through the same. So now, with that said, those are my 2 billionaires for the week, Steven Schwarzman and Ken Griffin. A random fact, he's building a 27-acre Palm Beach compound estimated to be worth 1 billion. Now, that's just, if you remove 1 billion out of his 41.8 billion, he remains with 40 billion. That is nothing to him, and he's still enjoying life. So guys, it's going, and he's only at the age of 55, so don't think he's too old. He's not like Steven Schwarzman, who's 77, who some people wouldn't consider to be that old, especially with the amount of net worth he has. Okay, but at 55, with such a net worth and doing such important things in the world, that is quite an achievement, and it's quite inspirational, not only to me but to you guys as well. So now, with that said, come to Caleb, who is building his net worth slowly and steadily. It takes time. These guys didn't get this net worth in 1 year or 2 years or 10 years. Okay, it takes time, and we're going to get there one way or another. Remember, finance is one of the industries that has the most millionaires and most billionaires out there. We've talked about this in a different video. You can do your own research. Just search the industry with the most billionaires in the world. You're going to find finance at the helm of the industries with the most billionaires. So now, back to Caleb. How have I been trading this year? How's my performance been? Now, it's good to be transparent and show you how I've been trading. So you can see so far, this is my live personal account with FXTM. If you want to open an account with them, the link is in the description below. Start your trading with them as well. I've been trading with them for the past 6 months. Okay, I trade different accounts, but I want to show you why this one and why I've been following this one for some time. So I have different prop firms, I have different personal live accounts, but this is one of them. So this is my performance this year, and I was showing one of my students yesterday, and she was very shocked that I would only take 4 trades in a month, 12 trades, 7 trades. She's new to trading, and she thought when you're trading, most of the time you take many trades, or you're trading multiple trades every single day. Now, for me, that is not the case. My approach is quite different from other people. I'm more of a swing trader, so I tend to take very few trades. Now, in the month of April, I quite took a lot of trades. Okay, quite a lot. I'm not proud of that, but for me, on average, I keep it around 10. Anything 10 with a deviation of 2 to 3. What I mean by that is I look for around 10 trades in a month. Deviation of 2 to 3, meaning I can have an extra maybe 2 or 3 trades, or maybe minus 2 or 3 trades. My backtest data shows when I start taking 18 trades and above, I'm normally over trading. Now, many people normally come and are confused and say, Caleb, you're taking 5 trades in a month, you're taking 4 trades in a month, you're really under trading. Some people will come and say, Caleb, you're taking 20 trades in a month, you're over trading. Now, you can never judge if someone is over trading and under trading if you do not have backtest data. Like, what are you basing it on? There's some people who, if they take 20 trades, they've even under traded that month, okay? And there's some people who, if they've taken 20 trades, they've over traded that month. So what do we base it on? What do we mean when we're saying over trading, under trading? It is only based on the fact that you have backtest data. Your data has shown you that on average you get 10 trades in a month. So in that month, live trading, I take about 20-25 trades. Then I'm over trading with a multiple factor of times 2. Okay, if I'm taking 5 trades in a month and I'm supposed to be having on average 5 trades, then I'm under trading by half the number of trades that I need to be getting. Okay, so that's how you judge over trading and under trading, and I'll do a different video on this one to explain it more with the backtest data, what that means. But on to this one, my all-time performance this year. You can see I really increased the number of trades the number of pairs I've been trading. I'll explain this also in a different video, but you can see now I have USD CAD, Aussie dollar, gold, GBP USD, Euro USD, and US 30. Now you can see my all-time performance is down here. I've taken a total of 66 trades this year, 35 profitable wins, which is 53%, and only 31 of them were losses. Okay, I've had a consecutive wins of 8, which means many of my trades follow each other that were successful. And I've also had bad times where I'd had 6 trades consecutive losses, and I think that was in the month of March. I had a bad month of March, and that's what happened. Most of my trades, I never take any trades without a stop loss. You can see that's 100%. Some trades I've taken 64 of them, which is still a high percentage with take profit. There was a time I was a bit in a rush. I was executing a trade and I had to put the stop loss mandatory. So I took the trade, then put the take profit later. And that's why you're seeing that data. A big chunk of my trades have been buys, but not a big difference. 34, 32. So I've had multiple open trades at the same time, only 4. I never take multiple trades at the same time. So that's my performance. Now if you look at a month-to-month performance, now let me show you my month of June. Now if you click June, you want to look at June, these are the only pairs I traded, and this was my performance. I had 9 trades, 78% success rate, 22% losses. Okay, only 2 losses, 7 winners. So that's what happened on that one. If you look at June, okay, now we're looking at June. If you look at May, I had a 57% success rate. I only had 3 pairs that I traded, 7 total trades, 4 winners, 3 losses. Okay. April, I had 18 trades, which was quite the most I've had this year in a single month, which I had a 50%, 9 winners, 9 losses. You can see how short of a time frame those were quick trades, and that's why I had multiple of them. Okay, so not really proud of this one. This wasn't the best month. As much as I had a 50% success rate, it wasn't the best month for me. I kind of overtraded. Now March for me was the toughest month this year, where I had about 3 winners and 8 losses. So some months go like that. It was a tough month for me. I had a lot of losers, which is normal. And that's what I'm saying. Never judge your performance on a 1 month basis. I won't come and say March I had a 27% success rate, I'm a very bad trader. And I won't come and say June I had a 78% success rate, I'm a very good trader. No. Take on average 6 months, compile all that together. So March, that's what happened. February was also a good month. I had about 75% success rate, 9 winners, 3 losses, average 16 hours per trade. And January, you can see it's quite low. I had a 25% success rate, but January was actually a profitable month for me. When I started trading this account, it was mid-January. I had taken some trades earlier on when the month had started, and that's why you're seeing maybe that's why the reason I have very few trades that month. But I started this account mid-January there. So it was quite a successful month for me. But anyway, data-wise, this is normal also. 25%, 75%. Now, if you look at all time, at least on average, all that comes down to 53%, 47%. Average trade length, about 24 hours. So for me, you can see I'm quite on average between day trader, swing trader on average. So yeah, that's how my performance has been. You can see some trades like US 30. I've taken trades, 0 loss, 2 profits. This one, 2 profits, 1 loss. You can see GU has been quite good to me, 4 profits, 1 loss. Come here, 7 profits, 6 losses on gold the whole year. This is the whole year data. Here I've had about 10 profits and 11 losses on Aussie dollar. And this one I've had 12 losses and 10 profits on USD CAD. So that's a bit of the data that you normally have. You want to be looking at. Now this is feedback. The good thing about trading is whatever you learn, you go trade, you get feedback, you improve it, or do away with it. Improve, do away. So I want to show you a bit of my performance. This is the long-term big picture of what we're working towards in order to grow towards the direction of Ken Griffin, Steven Schwarzman, Ray Dalio, and the likes. So that's it on that. Okay, now let's go to analysis. What are we looking at this week? Now, first things first. For the past 2 weeks, a lot of things have been happening. Interest rates across the board. We saw some countries reducing their interest rates. Some countries have kept them stagnant, didn't do anything. And that's what we've been watching. Now, this week for me, what is the main data I'm looking out for? Inflation. Thursday, we have inflation at 3:30 p.m., which is a core factor to anticipate how the economy is doing, what the economy is doing, to anticipate whether they'll be increasing interest rates sooner or later, keeping it flat as it is, or reducing it sooner or later. So for me, this is the major data. Last week we had NFP, which reacted quite not too harshly. It was quite volatile, but not too volatile. We've seen worse, okay, in the market, and that's what happened. So this week I'll be paying attention to Thursday CPI US, and that's what I'm watching out for. So other than that, now what are we looking at in the markets? Now in the markets, I've had a couple of trades like you've seen this couple of few days. This month, I've not shown you this month actually. This month I've taken 5 trades so far. I've had 2 wins and 3 losses so far, but the month is not over. Today is the 9th of July, and we're yet to see. I've had 100% stop losses, 100% take profits, only taken 3 pairs this month, and this is what the outcome has been. So we'll wait to see what will happen at the end of the month, and I'll keep you updated on that one. So I think I might have maybe 2-3 more trades, okay. I don't have too many trades in a month, 2, 3 or 4. I don't think we might pass 10, okay, towards the end of this month, but you never know. I trade in terms of opportunity, not in terms of what I think or what I want. If opportunity comes well researched, meeting my criteria, then I'll take the trades. So that's just being transparent, because most of you will relate and understand what that means. So what am I watching out this week? I don't have any probable setup at the moment. So I won't give a lot of gibberish and guesswork of what is yet to happen. Remember, in trading, we're never trying to predict the market. We're trying to read what the market is telling us and anticipate whether to buy or sell. Now, last week there was a very good sell on USD card. Okay, you can see here. So you can see that. So that was a very good sell. Market fell all the way straight to target. That had a minimum risk reward of about 1:5. I missed out on that entry, but I journaled it, and I had some commitment other trades. So when this trade came in, I was already full on risk on my account, so I couldn't take any more risk. And part of the reason was because also I was a bit biased on the direction of the trend. A few of the losses you're seeing I was still expecting the dollar to continue rising as it had come with strength, but that's not the case. Market ended up falling, and that's why this market that's why I didn't get an opportunity to trade this market. But this was a very good sell position. Now, that's in the past. What are we waiting for? Market is at a support. We're waiting to see some corrections around here. We can see this strong impulse. We could get some pattern correction here. And I'm still quite bearish on this one. If market doesn't hold, okay, this level, then I'll be expecting it to fall much lower. But I don't have any pattern here forming, so I don't want to predict and say anything that is not going to happen. Here I don't have anything much yet forming. I still need some clear patterns to form before I commit on any direction that I will be trading. Same thing on Aussie dollar. Most of my pairs markets have been moving strongly in the direction of the trend. For example, Aussie dollar, you can see we strongly broke above the previous high, and you can see we've had a successful follow through. Market has continued staying above this level. We had not broken above this level ever since May. So for May, June, the whole 2 months, market hadn't broken above. Then eventually we broke above, and market has maintained above that level. So also this one, market has just come from an impulse, still waiting for a clear correction so that I can buy this trade. So nothing much on that one yet. Gold has been quite interesting. Looking at the big picture, gold is in an uptrend. So if you go to the daily chart, sorry about that. If you go to the daily chart, gold is in a major uptrend. You can see this major uptrend, still not able to break support. This support level really held, and market has pushed higher. Now, how do you know it's a strong support? When you see market falling with strong momentum like this, not being able to break below and continuing to move above, that's a very significant information you should not take lightly. So gold is still in bullish territory. We can see last week market broke to a new above the previous key level, broke above. Then yesterday we saw some sell-offs coming in, and today we want to see what will happen in the market. Market has closed back below this resistance, support and resistance. Now I want to see how markets will unfold later on today. Can we continue moving to the upside, or will we continue falling to the downside? So also on this one, no clear direction just yet. No clear direction is clear for me. It's quite more bullish than bearish, but no clear pattern yet to take a trade. I don't just buy because market has come down. No, there's a clear pattern that needs to be formed for me to enter that trade. So also on this one, quite on the limbo, just waiting for clear market structure. Same thing on the dollar index. Okay, market has also been trying to move quite to the upside, but last week we got quite some sell-offs, and I was looking for these markets to continue moving further up, but markets ended up falling, and that's why I got a couple of losses. As I had GU shorts, I had euro shorts, I had gold shorts as well. Okay, so that's what happened, and that's why markets have continued moving to the downside. On a daily chart, we can see market is sort of in a bullish trend. Okay, bullish territory, it's in a more bullish territory than it is bearish. Okay, but if market is not able to break back this key level, breaks below the trend line, then it's more bearish signal than it is bullish. So that's what I'm also watching on this one. In a nutshell, most of the markets I'm looking at, there's no clear pattern just yet. Look at this one. Market just pushed to the upside. No clear pattern just yet to buy or sell. So I'm waiting for a clear indication to know what to do on this one as well. And GBP USD as well. If you've watched most of my analysis, sometimes I'll come with a very clear, crisp analysis. But this one, look, market has strongly been moving to the upside, looking for a clear pattern to form here for me to continue buying this market to the upside if it's to continue moving further higher. US 100, Nasdaq all-time highs, as well as US 500, all of them are at all-time highs. Market is moving non-stop to the higher side. I was anticipating a buy position here using my flag pattern, but market didn't really get to my entry point. I was waiting for that market just to come a bit lower, tap maybe the trend line before we go up, but that wasn't the case. Market ended up rallying, and you can see we're at new highs as well. US 30 on the other hand is not at all-time highs. Okay, you can see this one is not at all-time highs. It's still fluctuating at the 39,000 level. If it's able to break above the 40,000, 41,000, then we'll be at all-time highs. But for this one, not it. If you know, the US 30 is quite a conservative pair compared to Nasdaq and S&P 500, which move quite volatile during different times of the market. So it's the US 30 is never really in tandem with US 100 and US 500, and I did some research on that one. You can see here I have a tab open on index relations, and I'll explain that in a different video, not for today. I wanted to keep today focused and straight to the point. So no trade for me running at the moment. No, just being patient. This is a week where I might be a bit slow. I don't think I'll have any trade. Already taken 5 trades, which is quite a lot for me already in the month. Having only 9 days into the month, and I have 5 trades, taking it a bit slow. So understanding your system, understanding yourself, and understanding your approach. Never rush the markets, never force markets. I know most of you are trading to pass prop firms, get some money here, but the moment you start forcing trades, is the moment you start breaking the process of your trading approach. So we'll be back soon. Now we're back. We want to bring more content, more how we made, how we lost, how our prop firms are doing, live accounts, how we're performing, withdrawals, losses here and there, and lessons that we're learning from the markets, which can also be very impactful in your own trading journey that we'll be sharing along the way. So allow me to end that for today. Watch out for CPI later on Thursday, and I'll be back to update you guys soon how everything is going on in the financial market. So that's it from me. Hope you've enjoyed. Have a wonderful week, and like I always say, stay woke, stay financially literate. May the peeps be with you. Have a great week.